If you are shocked about the current stock market crash and ask yourself what will happen next, stay tuned. Hi guys, this is Dan from the Investment ABC, and in this video I want to talk about what will happen now after this epic stock market crash. If you are a subscriber of my channel and did what I did, you are sitting safe on the sidelines and are watching this meltdown ready to jump in when the markets reaches fair value. This was the fastest decline into a bear market in the history of the stock market. And again, it shouldn't be a surprise to you guys because, like I mentioned in previous videos, investors these days are most of the time just buying ETFs, which are tracking often the same companies, leading to huge valuations for just a few of them. Most investors also knew that the market was overvalued, but they couldn't afford to jump out and miss the gains. They were thinking that they would have enough time to get out. That's why everyone wanted to get out of stocks at the same time, at the time when extreme fear and uncertainty hit the market. Suddenly, investors began to understand that those companies which piled on too much debt over time, like Occidental Petroleum for example, are on the verge of bankruptcy when the recession finally arrives. These companies were sold in such a violent way that they lost 50% in a single day. Oxy lost more than 80% of its value from the top, and it is not alone. Many other companies in the cruise or airlines industry were suffering equal losses. I started my career as an investor in the markets in 2001, so I experienced the two previous bear markets, but the magnitude and velocity and volatility of this crash is greater than the previous ones. Many novice investors bought the dips just to see their portfolio shrink and shrink. That is what I myself did during the bust of the dot-com bubble. I just bought too early and too much shares in one go and quickly found myself in a declining market with no cash left. The best thing to do is to buy in 20% increments at these levels in my opinion. I deployed 20% of my cash reserve in companies with a solid balance sheet like Gazprom, China Mobile, 3M, Disney, Nvidia and Baidu. Furthermore, I bought two spec stocks with huge potential, Meituan Dianping and Energy Fuels. I bought many shares because I sold all my stocks except for some of my NEO shares, which I also reduced when NEO hit the $5 range. I will try to do some analysis on these companies if I have some spare time left. Although I bought so many stocks, I believe the market is by far not done to decline yet. Therefore, I have 80% in cash left to deploy once the market moves lower. I expect the Dow to see and test at least the 17,000 to 18,000 range, and we have to see whether this will be the low or not. The central banks and Trump are trying everything to reflate the stock market again. But the problem is that it takes more and more money to reflate this bubble. The Fed said it would buy 1.5 trillion in assets after they already lowered interest rates by 0.5%. And also other major central banks like the ECB or RBA followed with liquidity injections. The question is if these huge and insane amounts of money will have an effect. Initially, yesterday, the stock market still tumbled and closed almost 10% lower, just to recover the 10% today, after President Trump held his emergency speech. The question is, will we really see a quick recovery and new all-time highs due to these stimuli packages? In my opinion, we won't. What I think will happen is that the markets try to go up to the 23,500 level in the Dow maximum before investors sell into the dead cat bounce. Why would investors do that? Because what they will realize is that no matter how much central banks print and try to stimulate the economy, the velocity of money will sink like a rock. Consumers are scared like hell and will scramble for cash to be able to survive the coming rainy days. No one will buy a car or $1,000 iPhone if he is not sure about his job. This will put immense pressure on companies which will start laying off people in masses. Once this happens, it will start the downward spiral faster and faster and could lead into the second Great Depression. Central banks and governments know that the whole system is a game of domino. If one stone falls, it will create a cascading effect. Asset prices will fall further to levels we can't even imagine if a cure is not found ASAP. A cure would be the only thing which would boost confidence and the velocity of money. But I doubt that the cure will come so soon. I expect it to come when prices are at rock bottom and many people like Buffett bought enough shares for pennies on the dollar for the stock market to take off again. Once they announce a cure and people are confident again, asset prices will start to rise from a much lower level. But this could take a long time. Meanwhile, central banks keep pumping and pumping when they see unemployment rise. All the liquidity will find its way into assets, goods and services once the velocity of money increases again. For now, guys, cash is king because everyone is scrambling for it. But beware that at some point when the velocity of money increases, inflation will pick up rather quickly. So be prepared and take advantage of lower gold and silver prices to protect yourself of a banking collapse or inflation going crazy at some point down the road. At that time, central banks will either let inflation run havoc or are forced to raise interest rates sharply, killing the last little bit of the economy and unleashing the second Great Depression. Guys, if you like this video, hit the thumbs up button, share, subscribe and comment. Thanks and see you in the next one. Bye guys.